Please subscribe, like, and comment.
Imagine waking up, checking the news, and seeing headlines just screaming about the stock market. Not just up, but a really historic surge.
Yeah, quite a day.
That's exactly what we're getting into today. We're doing a deep dive into April 9th, 2025. And, well, a pretty significant announcement from President Trump that sends waves through the markets.
Right, and to really unpack it all, we've pulled together info from quite a few places: New York Post, The Guardian, Reuters, CoinJournal for the crypto angle, and the hard numbers from Yahoo Finance.
Exactly. So our mission really is to cut through the noise for you.
Yeah.
We want to understand what happened, why it happened, and maybe the first key takeaways from this huge shift.
Let's do it.
Okay, so April 9th, what was the main event, the big headline?
Well, the big story, and the New York Post really called it this, was a historic rally in U.S. stocks. I mean, some really eye-popping single-day gains.
Well, let's get right into those numbers then. What did we see?
Okay, so the Dow Jones Industrial Average, it rocketed up by 2,271 points. That's a 6% jump, closing at 39,916.64.
Wow, 2,271 points.
Yeah, the Post highlighted it as one of the biggest single-day point gains ever recorded for the Dow. Just think about that context for a moment.
That definitely makes you pay attention. What about the broader market, the S&P?
The S&P 500 was right there with it, climbing 5.9% according to CoinJournal. And what's interesting, CoinJournal noted it wasn't just, one area. It was broad. Industrials, tech, retail, finance, they were all up significantly.
Okay, so widespread buying and the tech-heavy Nasdaq. It often moves more dramatically.
It certainly did this time. The Nasdaq Composite surged 7.7%, a really big jump, hitting a notable high. The Post said this was really driven by rebounds in those big tech names and high-growth companies.
Okay, huge moves across the board. So what was the catalyst? What actually happened that morning to spark this?
The trigger, and all our sources basically pointed to this, was President Trump announcing a 90-day pause on most new tariffs. That seems to be the key piece that lit the fuse.
A tariff pause. Okay, let's unpack that. What did that actually mean? The details.
Right, so based on reports from Reuters and The Guardian, it involved temporarily lowering tariffs to a 10% reciprocal rate for most countries.
Reciprocal meaning?
Yeah.
They charge us, we charge them, that kind of thing.
Exactly. Sort of a baseline matching tariff. So for many trading partners, it signaled a potential easing, a step back from bigger tariff threats.
A sigh of relief for many, perhaps. But you said most countries. There's usually a catch, isn't there?
You're right to pick up on that. And here's where it gets really crucial for understanding the whole picture. China was specifically excluded from this pause.
Excluded, so no pause for them.
Worse than that, actually. Tariffs on Chinese imports were raised significantly, up to 125%. Both the New York Post and The Guardian were very clear on this point.
125%. That's massive. What was the justification given for that specific move against China?
The New York Post reported the stated reason was a perceived lack of respect. So you have this dynamic, easing tensions with many, but a major escalation with China.
So a carrot for some, a very big stick for China. What was the overall stated goal of this 90-day pause period then?
According to the Post, the objective was framed as fostering fair and reciprocal trade, using this 90-day window to allow time for negotiations with various countries, trying to reach better deals, essentially.
A negotiating tactic, maybe. Okay, now this wasn't just a stock market story, was it? We saw movement elsewhere, like crypto.
Oh, absolutely. The positive vibe definitely spilled over into the crypto markets. Bitcoin, for instance, CoinJournal reported it jumped over 4.7%, pushing past $82,000.
$82,000. That's a strong move. Is that directly linked to the tariff news?
CoinJournal made that connection, yeah. They suggested it reflected a real boost in investor confidence overall. When broader economic fears ease up, investors sometimes feel more comfortable moving into assets seen as having higher growth potential, like Bitcoin. It's that classic risk-on sentiment.
Right. Less worry about a trade war, more appetite for riskier assets. Did Ethereum follow?
It did. Ethereum saw a significant rise, too. Reuters mentioned its performance reflected that broader enthusiasm for altcoins and maybe some renewed confidence in the network itself. It seemed like a rising tide lifting quite a few crypto boats.
And this positive feeling extended to companies linked to crypto, too, right?
Exactly. Crypto-related stocks definitely benefited. MicroStrategy is a prime example. Yahoo Finance data showed its stock, MSTR, closing at $293.61 around that time. Okay, that specific figure was from April 4th, so a few days before, but indicative of the positive trend.
And why MicroStrategy? What's their big crypto connection?
Well, as CoinJournal pointed out, MicroStrategy holds a huge amount of Bitcoin on its corporate balance sheet. So when Bitcoin rallies hard like that, their stock is seen as a kind of proxy, a way for traditional investors to get exposure. They benefit directly.
It makes sense. What about the exchanges where people trade crypto? Coinbase.
Coinbase, Global, Koyanin, yeah, they saw a notable uptick too. CoinJournal linked it to that bullish feeling in crypto trading. More price movement, more volatility often means more trading volume, which is good news for an exchange. They apparently had their best daily gain in months.
So the wave rolled from stocks to crypto stocks. Let's zoom out again. What about the rest of the world? International markets.
Yeah, the optimism wasn't just contained to the U.S. Reports from CoinJournal, Yahoo Finance, Reuters all indicated that European and Asian markets rallied too, basically anticipating that these eased trade tensions, excluding China, of course, would be good for global commerce.
And what happened with things like the U.S. dollar or safe havens like gold?
Well, the dollar actually weakened slightly. CoinJournal suggested this was maybe because people expected capital to flow more freely globally, reducing some demand for the dollar as a reserve. And gold, the typical safe haven, its price dipped. Investors were shifting away from safety and towards riskier things like stocks and crypto.
Classic risk-on move then. Okay, let's really try to understand the why now. What were analysts saying? How do they interpret this sudden market euphoria?
The dominant theme reported widely, including by the New York Post, was that this was largely a relief rally.
Relief. Relief from what?
Relief from the uncertainty and the fear of escalating trade wars. Markets had been pricing in, or at least worrying about, more tariffs. So this pause, for most countries, felt like a weight being lifted, a welcome surprise.
That makes sense. Uncertainty is definitely something markets dislike. What specific factors did they point to?
Two main things stood out. First, simply reduced trade uncertainty. That pause, again excluding China, offered hope that a really damaging global trade conflict could be sidestepped, at least for a while. That boosted confidence.
Okay, less uncertainty. What was the second factor?
Increased risk appetite. The easing of those trade tensions seemed to also dial back fears about a potential recession or economic slowdown. So investors felt more willing, more bold perhaps, to move money into equities and digital assets, hoping for better returns.
Right, a combination of relief and renewed confidence driving people towards riskier investments. But we have to keep coming back to that huge exception.
We absolutely do. It's probably the most critical nuance here for listeners to grasp. As the New York Post and The Guardian stressed, while most tariffs were paused, tariffs on China went up to 125%.
It's such a stark contrast.
It really is. It tells you that while there was a general easing, the specific tension with Beijing wasn't just continuing, it was actively being intensified. That's a really important distinction.
So not a blanket everything is fine signal at all.
Not at all. The market reacted positively to the general news. The pause affecting most partners, but that huge hike on Chinese tariffs signals ongoing, maybe even worsening, friction there. It adds a layer of complexity and potential future volatility.
Okay, let's try and wrap this up then. Pull the threads together for everyone listening.
Yeah.
April 9th, 2025, we see this massive historic surge in U.S. stocks.
Driven primarily by President Trump's announcement of a 90-day pause on most new tariffs.
Right. And this sparked a really broad rally. Tech stocks did particularly well. And the positive feeling carried over strongly into crypto. Bitcoin, Ethereum saw big gains.
And the companies connected to crypto, like MicroStrategy and Coinbase, they rode that wave too. Even global markets mostly joined the rally.
But, and this is the crucial but,
it's vital to remember this was largely a relief rally. And the relief wasn't universal. The massive tariff hike on China, 125%, is the big asterisk here. It signals that major trade tensions definitely remain.
So there's this sense of temporary calm, perhaps, for many trade relationships, but also heightened tension with a major global player. That 90-day window is key.
Exactly. Provide some breathing room, but the underlying issues, especially with China, are far from resolved.
But
the uncertainty hasn't vanished. It's just shifted, maybe.
So as you digest all this incredibly rapid shift, it's worth thinking about what this temporary easing alongside that specific escalation with China really signals. What does it mean for global trade, for geopolitics, and how it might connect back to your own investments? And maybe the biggest question is, what happens after these 90 days?
Please subscribe, like, and comment.